So when we say capital transition firm, it's a very simple term. You've got capital, which has been for years going around the system, going into companies which are old, dated, and perhaps cannot make the climate transition. So these are sunset companies, old companies, which cannot decarbonize, which cannot change their supply chains, which cannot adapt themselves to reduce plastic waste, pollution in the seas. And money naturally will flow away from them. That's how markets run. So capital transition is going to be this natural process where capital goes from old sunset businesses that, quite frankly, are not viable anymore to new, innovative, emerging businesses that understand system change. They can address climate, they can address carbon, and they're more innovative. So that's the major definition. Money moving from one side to the other. Now, the speed and rate of this transition is only going to get faster, and that's because we're not addressing climate. So what we've seen is more forest fires, we've seen more carbon, more climate, more droughts, changing weather patterns. And as anyone in the insurance industry would tell you, insurance premiums are going through the roof because the insurance industry see it as a big risk. Long-scale investors like pension funds, sovereign wealth funds see it as a big risk. And they will slowly, but actually it's speeding up, start transitioning their capital from these old businesses that cannot adapt or are currently engaged in greenwashing, and they will move to the innovative new businesses. So that's what we mean by capital transition. It's the movement of money from old to new.